were done in the loan repayment amounts. Other than that, not much adjustment, not much restructuring was done in respect of loans.
All right, Mr. Ali Babu, we'd let you go on that. Thanks very much for, of course, joining in and shedding more light on those numbers. The stock, of course, reeling under pressure, down by about 4%. It's the high interest costs and the forex losses that are playing heavy. But PTC India as well, do you remember we had the management, we were hearing them a little while ago, and they've joined us first now on the channel. Mr. T.N. Thakur, Chief Managing Director of PTC, joins us from New Delhi. Mr. Thakur, hi. Thanks very much for joining us. If we just go through the numbers rather, the profits have declined by close to 44%, while the income from operations also has come lower by about 20% at 1987 crore rupees. Give us, the key reasons for the same.
The profit and the income had declined because of the profit has declined because of the rebate income, because this quarter we did not have any rebate income except for 2.18 crores as compared to 23.37 crores in the corresponding quarter of the previous year. But this is a good sign. This should be taken positive, because this means that we are getting payments from the buyers on time, and that is why the buyers are availing of the rebate, and that is why we don't have any rebate income with us. So this is a good sign that we are able to collect more and more money on time. That is one reason for the decline in profit after tax. The another reason for decline in the profit after tax was the decline in the treasury income, because we don't have much of surplus cash in the treasury, and that is why the treasury income also has declined. So because of these two reasons, the profit after tax is lower. Income is lower. You see, I have always said that you don't have to worry about income, because what we are concerned is the volume of trade and the margin that we get. The income is a function of the price in the market, and the price in the market is lower because of the low demand, because of the state electricity board's problems, cash problems. So therefore, we are not worried about income at all. What we should be really concerned is the volume and the margin. The volume has also declined by about 2%, which is marginal, and that is because two of the major buyers who were buying substantial power from us, Tamil Nadu and Uttar Pradesh, we have stopped supply to them because of the payment problems. But once we resume the supply to them, I think the volumes will grow significantly. And had we continued supply to these two states, notwithstanding the payment problems, then the volumes would have been up by about 30-40%. But that we took a very deliberate view that we should stop supply till the payments are fully made to us.
Afternoon, Mr. Thakur. So I'm going to take off from the point that you made. It's the margins as well as the volumes which are worrying you. If you could just tell us what was the average margin that the company enjoyed per unit in the first quarter in power trading?
The average margin is of 4 paise. And it is also slightly lower. Earlier it was, in the corresponding quarter of the last year, it was 4.57 paise. That was because the old contracts had a margin of 7 paise, but the new contracts has a margin level of around 5 to 6 paise, and substantial amount of power is being received from Bhutan, where the margin is less than 3 paise. So the average comes to around 4 paise as against 4.57, which was earlier the margin. But then, as I said, that this is because of the lower demand in the market, and that is why the margin is also slightly under pressure. But I am sure that margin will also improve with the improvement in the volumes once we resume supply to the states where we have stopped supply.
Right. So, Mr. Thakur, let's also touch upon the pricing trends that you have spotted, and what sort of range do you expect the merchant power rates to remain in for the next 9 to 12 months, especially in light of the weak monsoon cues?
It's the ability of the state electricity board to buy power. As you know, the banks have stopped working capital to them. Only silver lining is that PFC has earmarked some 18,000 crores of rupees for helping the state electricity boards to tide over the current cash problem. But then PFC also has put condition of reforms that unless the reform measures are taken, this cash will not be released, which is a good thing, that reforms measures have to be taken by the state electricity board. So if they have money to buy, then the prices will pick up. But if they don't have the money to buy, then how do you think the prices will pick up? Because to the farmers, because of the weak monsoon, to the farmers the supply will come only from the state electricity boards or their successor companies. And that would not happen unless their own cash situation improves. So I'm afraid that this pressure on price of power in the market will continue for some time.
And Mr. Thakur, talking about some of the distribution companies, what are the dues still to be received by your company? If you could give us a state-specific breakup of the same.
There are only two states from where we have to still receive dues, which are significant. One is Uttar Pradesh, where from on our balance sheet we have a dues of around 500 crores, and another 700 crores is the dues which we have to collect on behalf of the suppliers of power, because the agreement there was that we will make payment to suppliers only on receipt of payment from UP. But 500 crores we have made payment to the suppliers, and we have not been able to collect from UP. So altogether around 1200 crores of rupees is to be collected from UP. And from Tamil Nadu, earlier the outstanding was more than 700 crores, but it has come down to around 450 crores now, because they are gradually repaying the dues. So Tamil Nadu situation is well under control, but UP we are still little worried, and we are in dialogue. Today also our CFO and our head of marketing, they are in UP to sort out this problem with the UP people and try to expedite the payment from them. Otherwise we are perfectly okay. As you have noticed that we are getting payment on time, and that is why our rebate income has come down, which I think is a good sign.
All right, Mr. Thakur, we'd let you go on that. Thanks very much for joining in, of course, and shedding more light on those numbers. A significant amount of dues are still expected to come in from the Uttar Pradesh as well as Tamil Nadu. But with that, we'll, of course, slip into a very quick break on Traders 20. But don't go anywhere, because on the other side, Sandeep Waghle as well as Shardul Kulkarni will be joining in with their top pairs. Back with us on Traders 20. We've got the markets trading relatively flat, but let's get you some more smart trading ideas in the session. Sandeep Waghle and as well as Shardul Kulkarni are here with us. Sandeep, let's start with you and the three top buying ideas.
A buy in Raymond, stop loss of 360, target 373, given a very clear price and a volume breakout in the hourly charts. So I expect a 3 to 4% movement by the end of the day, or possibly in the next couple of days. The second one is a buy in Voltas, stop loss of 109.50, target of 118. A very clear double crossover on momentum indicators in the daily charts. Next 3 to 4 days this move should come in. And the third idea is a buy in Havells, stop loss of 550, target of 580. The swing high has been broken out in the daily charts, so I feel that move should come in over the next 4 or 5 trading sessions.
Okay, that's a word, and that is exactly what Sandeep Waghle is recommending. But the HDIL numbers I have just out on your screen. Let's take a look. They've clocked in a profit of 105 crore rupees. Now, this has come in far below what the street was estimating. Remember, we were working with a number that was already below the last time's number by 22% at 148 crore rupees. But this number is substantially lower than that at 105 crores. Remember, you're expecting a contraction in the margins as well, and the revenues this time around will be driven by the TDR and FSI sales. And there you have it. You've got the sales number as well at 201 crore rupees. That's almost half of what the ET Now poll was expecting. 491 crore rupees, that was already down by a marginal 2%. So this is going to see a major blip. And you can easily see the stock price reading into these numbers by and by. It's been a steady fall, and now it's off by 3.3%. I think it's the revenue picture which is largely seeing a downtick on the back of the fact that there will be no revenues from projects on account of failure to cross revenue recognition. Most of the projects will start to contribute from the second half of the year, 3.7% off. Shardul Kulkarni also joins in to talk about his picks on Traders 20. Hi Shardul, welcome to the show. What have you got for us today?
Well, the first pick is JP Associates. The chart structure suggests a formation which is called as a morning star, and we feel that possibility of 78.5 being tested is very high. So we recommend a buy with a stop loss of 74 on the lower side. The second stock would be STC India. In case of STC India, we've seen a very strong move in case of Wednesday's trading session. Post that, we've got a consolidation, and the bunch of candles which is formed in the last 5 sessions basically forms a rising 3 pattern. So that is why we are recommending buy in case of STC India. Stop loss would be 272. Target price on the upside would be around 302 rupees. And the third is Hindalco. We are recommending a sell in case of Hindalco. Yesterday, in spite of the market being up, we saw a bearish engulfing pattern on the daily charts, and we are seeing that the possibility of 115 cannot be ruled out. Thus, we recommend selling Hindalco with a stop loss of 124.5. Sell in the range of 121 to 122 on the August futures. We look at a potential target of 115 rupees.
Okay, to buy one short idea coming in from Shardul. But what are the trades that Rajat Bose and Deepak Mohani are betting on? Let's get them on board for just that. And Rajat, let's start with you and your 3 ideas for this morning.
See, I have 3 buy calls today. First one is DLF. DLF has seen a clear breakout yesterday, but today after opening higher it's consolidating. But I still feel that over the short term DLF can move up to something like 229 to about 234 and put a stop loss below 208. It's a short term trade, not an intraday trade, and chart looks pretty good here despite the corrective swing in today's trade. Second buy is Sun TV. Sun TV has been rising pretty steadily, and only in yesterday's session on very poor volume it has come down from higher levels to test the 5-day moving average around 299, and after that it has climbed back once again today. So I suggest buying into Sun TV with a target of 314, then 319 and 321 on the upside, and suggest a stop loss below 303. This is also a short-term trend. And then an intraday trade in Vale. Vale in the in the end of day chart as well as in the daily chart, it appears on the intraday chart it appears that the corrective swing that is going on is about to come to an end. On the tick chart as well as the 1-minute chart suggests that a consolidation is already on, and it can move up to 235 to about 237 kind of levels. I would suggest booking profits around 235 and put a stop loss below 227.90. These are the 3 trades that I have to offer to you.